All right, everybody, welcome back for another deep dive. You ready to get into some more fascinating financial stuff today?
Absolutely. Let's do it.
Okay, so today we're going to be talking about something that honestly kind of blows my mind a little
Yeah.
bit. Yeah, it's Social Security and taxes.
Oh.
Yeah. So we're looking at some info here from Diversified Insurance Brokers, and they put together this really great guide all about it.
Okay.
And I don't know about you, but like the idea that you work your whole life, you pay into the system, and then when you retire, you might actually get taxed on those benefits. Like what?
It's a surprise to a lot of people, I think.
That's a huge surprise. I mean, I was
Yeah.
reading this and I was like, hold on a second. So like, how does that even work?
Right. Well, so a lot of it has to do with something called your provisional income.
Provisional income.
Yeah. Have you heard of that before?
Um, I've heard the term, but I don't really know like what goes into it, you know?
Yeah. So provisional income is basically like a special calculation that the IRS uses to decide if any of your Social Security benefits are going to be taxable.
Okay.
And the thing about it is, it's not just the Social Security check itself.
Okay.
They're also looking at other sources of income.
Got it. So it's
Yeah.
like the big picture of your money situation.
Exactly. Exactly.
Okay. So like what kinds of things are we talking about here?
Well, like your adjusted gross income, for example.
Yeah.
So that's like your total income minus certain deductions.
Okay. So like if you have a traditional 401k
Yeah,
and you start withdrawing from that,
Yeah.
that would be part of the AGI.
exactly. That's going to be part of your AGI.
Okay.
They're also going to be looking at things like tax-exempt interest that you might be earning.
Okay.
And then they add on top of that 50% of your Social Security benefits.
50%.
Right.
Whoa. Okay.
Yeah.
So that can add up pretty quickly, especially like you said, if you've got a pension, you're taking money out of your retirement accounts.
Yeah,
Um,
absolutely.
You're probably going to hit a certain point where some of that Social Security is going to get taxed.
Right. And that's where these thresholds come in.
Okay. The thresholds.
Yeah. So the IRS basically sets these boundaries and they say, okay, if your provisional income is above this amount, then you're going to have to pay taxes on this percentage of your Social Security benefits.
Okay. So can you give us like for instance here?
Sure. Yeah. So let's say for an individual, the first threshold is $25,000.
Okay.
So if your provisional income is above $25,000, but below $34,000, you could have to pay taxes on up to 50% of your benefits.
Up to 50%.
And then if your provisional income is over $34,000, then up to 85% of your benefits could be taxed.
85%.
Yeah. And for married couples filing jointly, those thresholds are a little bit higher.
Oh, okay. What are they for couples?
Yeah. So for couples, it's $32,000. And then
Yeah.
above that, it's $44,000.
Okay. So basically what you're saying is even if you're not like, super wealthy or anything,
Yeah.
If you've got a couple of different income streams coming in during retirement,
Right.
it's a pretty good chance you're going to hit these.
Exactly. And that's why it's so important to think about this stuff strategically.
Okay. So let's talk strategy.
Yes.
The report from Diversified Insurance Brokers mentions a few things that people can do to kind of maybe minimize the taxes that they're paying on these benefits. So what are some of the strategies that really stand out to you?
Well, one really powerful tool is the Roth IRA.
Okay. Roth IRA.
Yeah.
Oh.
So if you convert some of your traditional retirement savings to a Roth IRA, any qualified withdrawals that you take from that Roth later on aren't going to count towards your provisional income.
So it's kind of like a loophole.
Yeah, in a way. It's like a secret passageway around the IRS.
I like that. That's a good way to put it. Okay,
Yeah.
so Roth IRA conversion, that's one thing.
That's one big one. Yep.
Okay, what else?
Another thing is managing your withdrawals from your traditional IRAs and your 401ks.
Okay.
So think about it this way. Could you withdraw a bit more from those accounts before you actually claim Social Security? That might keep your provisional income a little bit lower in those early years of retirement,
Okay.
which means less of your Social Security is going to get taxed.
So it's all about timing.
Exactly. Timing is everything.
Okay, and I know another thing that people talk about a lot is delaying Social Security.
Yes.
So how does that factor into all of this?
Well, delaying Social Security even for a few years can actually be really beneficial.
Okay, how so?
Well, it might allow you to use other assets first and potentially reduce your overall taxable income in those later years when you do finally start taking Social Security.
Okay.
Plus, the longer you wait, the larger your monthly benefit will be when you do start collecting.
So it's like a win-win.
It is. It can be a win-win.
You potentially get more money every month and you're paying less in taxes.
Exactly.
Okay. But I'm thinking, for some people, they need that Social Security income earlier in their retirement,
Right.
to make ends meet.
Yeah.
So what about those folks?
Well, that's where it's really important to talk to a financial advisor.
Okay.
They can help you weigh those pros and cons for your specific situation
Okay.
because everybody's different. Everybody's retirement looks a little bit different.
Right. And there's other financial products out there too, right?
Yeah.
I remember reading in this report about annuities.
Yes, annuities.
Tell me about annuities.
Yeah, so annuities can actually be a good tool for retirement planning because they offer tax-deferred growth.
Okay, tax-deferred growth. Explain that.
Yeah, so that basically means your earnings aren't considered part of your provisional income until you actually start taking distributions.
Oh, okay. So it's like you're kind of sheltering that money.
Exactly.
Yeah.
Exactly. And there are different types of annuities.
Right. Like what?
You have fixed indexed annuities and deferred annuities.
Okay.
And they all have different features and benefits.
And I remember seeing something in here about structured annuity income riders.
Yes.
What are those?
Okay, so those are kind of like special features that are built into some annuities.
Okay.
And they can help create a stream of income while also minimizing your taxable income.
So it's like you're customizing your income stream to try to stay below those tax thresholds.
Exactly. You got it.
Okay, this is a lot.
It is a lot.
It's a lot to take in. I think the main takeaway for me here is like, if you're planning for retirement, this is something you really need to think about.
Absolutely.
It's not enough to just like, save money and contribute to your 401k. Like, you've really got to understand how this whole Social Security tax thing works.
Right. You don't want any surprises in retirement.
No, you don't.
You want to be able to enjoy those golden years.
You do.
Yeah.
So it sounds like, working with a financial advisor who understands all this stuff is probably a pretty good idea.
Absolutely. It's always a good idea to have a professional in your corner.
Okay.
Yeah.
So listeners, as you're thinking about your own retirement plans, here's something I want you to think about. Given what we've talked about today, how is this information going to change the way that you're saving and investing?
That's a great question.
It's something to really think about.
For sure.
Because it could have a big impact on your future.
Absolutely.
So that's all for today's deep dive. We'll be back next week with a whole new topic.
All right. Looking forward to it.
See you then.
See you.